folks up on stage who have got a lot of experience over a very long period of time. I'm making you all sound very old. Sorry about that, but looking at the grey hairs, we are getting old. Who have been to many conferences. Christophe, I think, was at the first one back in 2009 in New York. And I thought what we would do is really focus in on the future of the marketplaces and really pick apart some of the things that have been spoken about this morning by Jonathan, Malcolm, and also Toby. But I thought starting off, because given both Jonathan and Malcolm have already spoken, I think, Christophe, could you introduce yourself?
Sure, Simon. So I'm Christophe Rousseaux. I've been the founder and CEO of emergence in Belgium. That started in 1996. We sold most of the company to Axel Springer in 2012. I kept being the CEO over there and start getting boards seat in different companies across the group and also like outside the group. So I've been in the board of Sologer, of Imotop, of Aviv, and also Cyan, with Simon. And now not working for Springer anymore, but I have created a private equity fund a couple of years ago in 2019 called Achilles, and we invest we have invested in 10 companies, and some of them in prop tech, like Apimo, for instance.
Thank you very much. Where I'd like to start this conversation off is really where Toby left off, is around finance. And is this the future? It's interesting how it seems to be a common theme of the finance, and is it changing the nature of whether it's real estate, whether it is cars, or even other type of marketplaces. So let's start with you, Christophe, from your perspective. Do you think that at the end of the day we're moving more finance-driven marketplaces rather than the traditional sale of the actual product?
I would say that yes, of course, because we are. It's getting much more like closer to the transaction. Even though like it's for me it's like a mixed model. So there are like no classified companies who are doing just selling the properties directly. It's always like a mix. But when you sell the property, of course, it's like much more finance involved. Yeah.
But do you see, I'll pick a right move of the world, for example, saying, well, I'll tell you what, I'll work with the agent, I will actually do the funding, provision of the finance, I'll bundle it up, and as Toby was talking about, I'll then sell the loans off to the market, 100 million, 200 million. It's much faster to get to those numbers with real estate than it will be with cars. Do you think that's a possibility?
Yeah, it might, yeah.
And how would that then change the dynamics of the industry?
I feel that it could completely change the dynamic of the industry, because it's most of the portals have thought about classified in the past, but now that they are getting to the transaction, it's like they are still it's still pretty new for them, and it's for them it's like really difficult to see like exactly where they will be going, because they will still need the agent. So it's it's kind of this mixture of It
changed the structure. Malcolm, from your perspective, can you see this occurring across all marketplaces?
So first of all, we have to be clear whether we're talking about our traditional classifieds platforms or transactional marketplaces. I've always maintained that for pure classifieds players who are still making most of their money from subscriptions, it's really difficult to make money from finance, because you're not actually where you need to be when the buyer is close to buying. So I think there, one needs to have a different strategy, and clearly just generating leads of this person might be interested in financing is not a very profitable business model. At least it's not one which will create a material amount of extra cash flow. Clearly, when you are a true marketplace with the transaction happening on your platform, then the finance attachment rate, as I called it, is fundamental to your business model. But then your competitive advantage has to come from scale, and scale is expensive to build, especially in today's market. One of the points I was alluding to earlier is if you have the data of a classifieds player, and I think it's hard to appreciate quite how much data a classifieds business has. They have years of price points based upon offer prices of properties or cars, and the clicks which they generated based upon where those offers were positioned and how long that listing remained on the platform. That's pretty valuable data. And in my view, it's combining that with the expertise of a bank, which creates the ability to have financing products like the buy before you sell product, which I think could be game-changing in some markets. So I think there's a terrific opportunity for the right classifieds guys to team up with private equity or with more traditional lenders and become a real force in financing, both in car and real estate.
Do you see that happening, Jonathan, from your
I do,
travel?
but I see it happening in a different way in autos from homes. I mean, autos, it's actually, we can see the reason that Carvana gets 81% attachment is because it's offering very good rates, it's a competitive player, and it's got a strategy to take that market. That's clearly going to happen. In homes, you've got huge investments. It's the biggest personal expenditure you have. You're going to shop around a lot more. You're really going to take a lot more advice on it. So I think it'll be slower, and I think we're going to see segments emerging of some players are doing stuff with finance very embedded, some players without. But the ones who are going to be most valuable are the ones who make finance work. Those are going to be the really super valuable marketplaces. And your point about banks, I think we'll see a wave of consolidation a few years down the line where we begin to see banks buying marketplaces in order to deal with their strategic risk. If you're Capital One or Santander, what Carvana is doing in finance must look very frightening because it really does take your business away.
Yeah. And we see this actually, of all places, the Russian market with Sberbank owning the number, 2 portal? I should know this better than I do.
Yeah.
And we've got Brazil, of course.
Yeah, but Brazil came about for other reasons.
The other way
but
around.
it's in those 2 businesses in Brazil are in a great position. And by the way, they take much more finance revenue than any other as a percentage, any other businesses around the world in classified, auto-classified. So they're up at kind of 30% finance revenue, we think. They don't publish it at that kind of level.
So clearly, what's critical to make this all work is data, right? Then you're sitting on more and more data, and I think Christophe, you were talking about just before. It's like, how do you see portals really starting to leverage the data that they're collecting today? And they've got decades of this data, right? And do you think they're actually making value out of it? And are they doing the best they can with it?
I would say that for me, today, they are not making value out of it. They are trying to. They are doing a lot of stuff, a lot of business intelligence. But I think it will happen in a couple of years. They will use much more the data that they have. We see that also, if we take this meilleur agent in France, they start to leverage the data with all the sellers' leads. But I would say that, to my knowledge today, most of the portal are not leveraged enough the data, and they could do it much more.
And if they did leverage it more, how would that change the industry?
That's a good question.
That's what I'm asking you.
The thing is that they will, in many different ways, I would say, they could make the agent, for instance, much more reactive with all the data. That's one thing. They can make also the buyer and the seller much more reactive if they were using much more the data. They could also in most of the country they don't have a lot of data that are public, like in the US, where in the US you have like all the selling price that are public, but in Europe, in most of the countries, they don't have this data. And if they were making this data available to either the public or to the agent, or even internally for them, it will definitely change a bit the dynamics.
I think Toby brought up a very interesting point about how the access to data makes everything far more transparent. The more transparent it is, the more, I think it was the metal margin is going to zero pretty quickly, right? Or probably is at zero for all I know. I don't know about cars.
Because
right?
it was negative in the last quarter of 2020. But I think we should be also a bit humble in what's involved here. Right? I mean, we've had estimates for years and years and years, which is a great example of trying to use the data of a very far-reaching classifieds platform to try and price, and they haven't always got it right. So I think the challenge is always to know, to be clear about how accurate you can really be based upon the transaction data which is available to a classifieds platform. But I still think that no one else is better placed, but it's just not, you can't set the market, but you could probably be the biggest influencer in that market based upon your data.
So really good example of data. Best that I know executing it in classifieds is Auto Trader in the UK. It realized it needed much higher quality data to go into transactions. It's worked with Mannheim over a couple of years. It now has the best valuations data in the market. It's wiping out the other players in the UK data market. It's helping it build relationships with manufacturers, with dealers that are closer and more embedded, and it's producing services that are much more sticky in terms of how it works. So it's a really great example. And then if you look at some of the recent kind of acquisitions and trends in finance, we've got Cars.com bought an F&I business, Auto Trader bought Auto Convert, which is a broker business. They're now beginning to get phenomenal visibility into finance data and the different patterns of usage, etc. So, there are some players who are really beginning to get this visibility and transparency. And I think it's crucial if you're going to go into transaction that you have to have a data-focused approach. So particularly anybody in autos, go look at what Auto Trader in the UK has done. It's superb, really is.
I think when you think about, when I think about data, it's for me, the more data I've got, the more opportunity I have to remove an inefficiency, whatever that inefficiency is within any particular market. So, and who was it telling me? I think it might have been Javier was telling me about how I think it's in the UK or maybe it's in the US, they're using the data about who's buying, or actually within Europe, that's right. If cars are maybe selling strongly in Finland, I think it was the example, and poorly in the United Kingdom. That's probably not a good example because you're now no longer part of Europe, right? But let's say
I would argue we are part of Europe, but
talk to Boris, right? Anyway, so then you got something like in France, maybe that car is not selling well there, and now it's about how you can quickly move them, the supply and demand, and really take out that level of inefficiency, which historically could not be removed, right? You could go online, I could see a car for sale in France, but am I going to get it to Finland? Right.
So pan-European price arbitrage, I think, is one of the strengths of the Auto One model, right? Which is sourcing between many countries, and also Spotter Wheel. We work for a very similar issue of sourcing cars in Germany, which are no longer attractive, and selling them in Southeast European markets where they're still very much in demand. So that's huge. And again, that's the single one thing which makes this company successful is its ability to have an incredible number of daily data points. So the best car buying departments, and it may be the same elsewhere, it's like a trading desk, and it has literally millions of data points each day to show the potential price points for thousands of different car configurations.
Yes. And which therefore, that data then can apply, take the real estate space, but take the rental space, can remove inefficiency in the rental space, where I can now go online, have my credit score straight away. I can then be given a deposit bond even to get my, remove me from point A to point B as efficiently and effectively as possible. The next thought that goes through my mind is, and if we go back, I don't know, 10 years, a decade or longer, right? We always thought of, established markets and emerging markets and the early stage markets, right? And they're all following each other, right? It's just a matter of time. Does that still hold true? Or do you think they're diverging in how they look at the world? Like, who wants that?
Well,
Christophe, do you have a crack at that one?
I would say that there are still different markets for me. Even though we can see like a lot of things that they have in common, but in emerging markets, for instance, the new builds are really important, and they are able to market it really well in comparison to the developed countries. I would say that just to go back to data, it's crazy that in 2022 we still have duplicates on websites. Huh?
Yes.
On portal websites. It's I thought that at some point somebody would find a solution on that one. But just to go back to the last question, in the developed countries, most of the portals today are still making money on classified, where in some emerging countries they are able to get closer to the transaction, perhaps like easily.
Malcolm, I'd like your thoughts on this because I know you're deeply involved in some of these emerging markets. And sorry, and can I ask Bruce to bring up the Slido as well, because I think you guys should join the conversation.
So I think even the terms emerging and mature just are meaningless when we talk about classifieds and marketplaces. I prefer to talk about sort of higher GDP per capita and lower GDP per capita markets. But if we look at when you move outside high GDP per capita Western markets, you don't have agency structures, intermediary structures with the cash flow necessary to pay subscription fees. So de facto, the classifieds players in these markets have had to develop other ways of monetizing. And we've seen for years, for example, the commission-based sales of new developments. The companies like Zameen, which many of us are aware of, is a great example of that. And we've got other companies in Southeast Asia where classic commission sharing models between the portal and brokers are for real estate. And it's no surprise that some of the best funded and fastest growing iDealers are across Southeast Asia and India and so on. So I think almost by necessity you need to monetize differently in lower GDP per capita markets. But I think it will be far-reaching. But we're certainly seeing the most innovation in such markets.
So I think actually many of the developing markets are beginning to leapfrog the developed markets. So, if you look at our markets, the developed markets, we've got this built-out infrastructure. It's fully developed, and we've got to kind of destroy that to get to the hybrid digital physical infrastructure of the future. In developing markets, you don't have that infrastructure. So you're forming an infrastructure still to a scale of business that's going to be bigger as those economies grow, and they're growing very fast. So you've got the ability to build that future infrastructure now, whereas we've got this kind of pullback of the legacy of the dealers and the estate agents. So I think there's a real opportunity. And you can see this, in property, you've got broking and marketplaces much closer together in the Far East in particular. And in cars, you've got the wholesale and the retail coming together in a much more fundamental way in the developing markets.
Yeah.
So
I agree, and I think Duai IQI is a good example of this, where they've taken the front end, which is the demand side, with the advertising side and lead generation side, which was the Duai model, bolted it together with, I think it's now 15,000 salespeople, and what they really are is saying, no, we're not a portal, we're not a marketplace, we're a platform, and we're driving efficiency in the traditional sales business, and we're using data to remove all the inefficiencies that exist. And I think that's where the emerging markets have said, you know what, we're taking the playbook of the right moves, etc., and we're going to throw that out. We aspired to be like them, but we've realized we don't have to be like them because our markets are fundamentally different. Let's duck into a question. Why haven't more companies here copied Scout24 and started offering a paid subscription product for users?
So this is about ImmoScout, I suspect, in Germany, where it's sort of, this is another very good example of monetizing in a supply-constrained market, where, and remember, this is a market where rentals was the bulk of the volumes by a long way. So rather than trying to charge agents money for posting rentals for properties which would literally be, zapped up in days, get the people who are looking for those properties to pay a subscription to get faster access to inventory, and also a kind of passport which showed that they had been kind of pre-approved for being able to pay the rent. So I think it's brilliant, and I think if you look at ImmoScout's numbers, it's really material in terms of total revenues. It could be 10-15% easily and still growing. There's one product for rentals, which is the bigger product. There's a smaller product for sales as well. And unfortunately, after that long intro, the answer is I don't know, because it strikes me that in every rental-heavy market, this is the smart thing to do. And so the Nordic countries are very heavy rental markets, and other parts of Western Europe too. So my view is I think they should. I can't see why they wouldn't.
So I'm also in the I don't know category, but I think one of the pressures in Germany was the threat coming to private seller activity, and the ImmoScout basically, I think, had to rebalance its revenues in a different way. So it had a kind of pressure on it in terms of the loss of the consumer revenues that it needed to kind of fix in some way. And I think that's made it much more innovative than many other kind of companies in the space. But that's a gut instinct, not a perfectly formed answer.
I think it has to do also like with the position of ImmoScout in comparison to its competitor. Because in most of the other countries, the gap is not so big, so huge between the competitor and the leader, and it has also to do with the exclusivity of the mandate in some point.
Okay. I think the next question is interesting here on real estate transactions. In this case, can you discuss financials and anyone's doing with a positive cash flow, i.e., profitable? One would think. That means, well, I can't tell you. GI IQI is profitable.
Yeah, I think you would find that various of the Far East businesses, I don't know if Key Resources and IKEA, I don't know if that's the right way to pronounce it, are also profitable.
Yeah.
But I suspect they are.
But the key thing here, though, is how do you keep your commission cost as low as possible?
And how do you make sure you get it?
Yes.
Which is the other part, especially in markets where you need a lot of infrastructure and a lot of tech to track through the transaction to make sure that when the broker actually gets the deal done, and that you get your share of the fee. But I don't think the issue here is cash flow positive. I think the issue here is policing and managing it in a light touch and profitable way.
I think the other thing is, I think a lot of the smart businesses are now breaking down the transaction into components and are focusing on individual components. So you might focus on finance and get that into a profitable shape that works. You might focus on vendor leads and get that into a shape that works. Putting the whole thing together may come further down the road if you take that kind of componentized approach to building it out.
Makes sense. Let's have a look at this top one here. I think it's an interesting question. How important do you think it is leveraging user or seller behavioral and conversational data for marketplaces as opposed to leveraging market and inventory data? So it's the interaction type data and what people are doing. How important is that vis-a-vis the inventory data? What about the cars or the houses and such?
I mean, they serve two different purposes, right? One is to get price points, and the other is to determine how far someone is in the buying funnel. So they're both really important, and you ideally need both, right?
But I think it's interesting. Carvana has said that its lending is better than, in terms of performance, than other standard lenders. OLX has recently said the same about OLX Autos. So, the suggestion there is that they're taking some kind of data, which is about the behavior of those consumers, that goes a step beyond the lender data that allows them to get a better result. So my gut instinct, neither of them has said what data they're using and how they're doing better with the data, but marketplaces, an awful lot about your customers that the normal lenders don't know.
Exactly.
Surely that must give you an advantage in understanding those customers. Even if it's about the range of cars they've looked at, the kind of information you can use you can apply machine learning to get a feel for is this consumer a better credit risk or a worse credit risk on the basis of our knowledge of history of those consumers and so on, once you've been lending to them.
So, Christophe, the businesses you're involved in, how are they thinking about data? Are they applying more and more machine learning type models to that data to then start to predict, I'm someone you don't want to waste your time on, whether, Jonathan is actually very core and, long way through the process, and you want to make sure that his lead is valued more highly than my lead?
Yeah, that's the whole point of analyzing the data. It's to also check which person you need to serve first, and yeah, definitely.
And the other thing I wanted to quickly talk about, because we haven't got much time left, is how do you guys think about the whole world of this blockchain, crypto, metaverse, all that sort of stuff that is still floating around out there? How does that impact marketplaces?
Do you want me to lead on that? Yeah, so I'm very skeptical about crypto, and I've always been in marketplaces. Blockchain is a solution in search of a problem in marketplaces. It's useful for crypto, obviously, but there are lots of other ways of doing valid trust mechanisms, I think. The metaverse I find really interesting. I think particularly in recruitment, it's got a huge potential to do stuff. And I think one of the interesting things people don't talk about the metaverse, I mean, there are obvious things like job fairs and interviewing diversity safe interviews that you can create and group interviewing and so on. Those things are obvious, but I think, and maybe I've watched a bit too much of Minority Report over time, I think the search mechanism in the virtual world could become really interesting. And I can imagine, three-dimensional searches for jobs, cars as well, how you present the data could really create some fascinating interfaces that allow you to get to things much more quickly that are more relevant to you. So that's my kind of Minority Report view.
Any other thoughts?
I mean, there's so many facets to the question. I think blockchain as a technology for registering land transactions I like, because, by the way, that actually even help classifieds players from having more of an end-to-end infrastructure to actually help mediate transactions. If we go into the world of the real world of metaverse, the really interesting question is, if you're buying and selling land on the metaverse, guess what you don't need? You don't need a broker, right? So the platform is owning that transaction process, and I think that's very significant. And to what extent we get more and more platforms for trading NFTs or land, it suggests that the platforms will be managing those transactions rather than third parties.
Tokenization of properties.
The other related question I'm curious about is gamification of how do you bring in the elements of engagement around marketplaces or guided marketplaces, taking people through a process, because as they go from more a straight search to a complete end-to-end transaction, you have to guide people through a process and take them guided search, but then everything else. And how do you think about not only the guided marketplace, but also gamification within that marketplace?
So the user experience, and I think it's also going one step further than what you've just been saying, the user experience could become dramatically more fun, right? Much more immersive. It could be, the idea of flicking through pictures of different, of homes of varying quality. It's not the world's most engaging experience, despite the very impressive traffic volumes which we see on the leading portals. But if you can turn that into a much more of a, walking through a neighborhood style experience, or so that kind of gamification, in my view, could raise user engagement. Whether it actually turns into a way of accelerating monetization is less clear to me at this stage.
Yeah, I guess the question is, what problem does it solve? So, are we actually just, we know people go to property portals because they love looking at properties and being nosy neighbours, and that's where a lot of the traffic kind of comes from. Are the transactional people actually going to transact more through gamification or otherwise? Not necessarily convinced they will. I think they just want the simplest, smoothest journey to the end result. And I think how you use the interface to give them an even simpler, smoother journey is the real key. If there are elements of gamification that work, fine, but I don't think that's the end game.
Yeah, but it could give like a better user experience. Huh?
Yeah.
Definitely.
Yeah. And remember, we're not just talking about real estate marketplaces. You've got the car marketplaces, you've got a range of other types of marketplaces. And I think what, the more I've been thinking about this, is the more that you think about guided search and a guided experience, especially when you're getting into marketplaces that are atypical, for example, in things like mindfulness and things where you're getting into everything from the yoga providers to the people that are helping with mental health, right? They're all marketplaces at the end of the day. It's about matching someone who's a provider and someone who's a supplier, but in an area of a marketplace that you're probably not that familiar with, and you have to be taken on a journey to maximise the benefit in that time.
So I think there's a big thing that is about gaining more information from you. And I think that's really hard to do in a web desktop or mobile environment, to quiz the user. And I think if you can use these mechanisms to actually glean more information about the customer's interest, then you get much better end results of your search. And search is really still a quite dysfunctional kind of thing. I mean, even Google search is quite dysfunctional. You have to really play around to find the things that you want. So I think that's the kind of area, again, where you can really get benefit. And it's about increasing the knowledge of the consumer as much as it is about, helping them more smoothly navigate through the service.
Yep. Thank you very much, gentlemen, for spending some time sharing your thoughts on what is clearly, we're just scratching the surface, I think, in the way in which marketplaces operate. We've come a long way in the last, since we've been doing these conferences, the last 12, 13 years, since we've been all involved in the last 20 plus years around this stuff. And I think, we're still nowhere near the end of this journey. So thank you very much. Fascinating conversation. I hope it was of interest to you out there. We'll be back after a break. Coffee, tea, food is being served out here in about 80 minutes or so. And I can't remember the exact time we're due back, but whatever is 80 minutes from now, we'll be back at that time. So thank you very much, and we'll see you shortly.
Thank you.